Hey guys, I want to wrap up this series on tax planning today with a personal example. It's going to be fictitious, but I think it will put the pieces together of what this actually looks like. It doesn't have to be as hard as it seems. So today, this is not personal, financial, tax, or investment advice. It's just for education. I'm going to start with a couple, Bob and Sue. Bob and Sue had 2 kids. Bob had a high-paying W-2 job in town, and Sue decided to stay home for about the first 5 to 10 years of their kids being alive. And what they did, I'm going to break it down into earlier earning, high earning, and then pre-retirement or retirement age. So here's what they did from a tax planning perspective. In the early years, Bob deferred his money in his employer plan on a Roth basis. They also opened up a spousal Roth for Sue, and they tried to max that out every year as they could. As their kids got older, they started putting more money into a 529 every year to get the state tax deduction. Now, as Bob's income increased their tax bracket from closer to 32%, once they got to the 30% bracket or higher, they decided to defer his money on a pre-tax basis in his employer plan. At the same time, since they had increasing income, they also decided to do a backdoor Roth so they could put more tax-free money away. Now, as he continued to earn more, they decided to add a taxable account or a brokerage so that they could even out their future retirement savings. Now, at the same time, prior to re-entering their workforce, Sue decided to get her real estate license. So what they did was they actually bought a short-term rental, and what she did was she managed the rental, and they were able to utilize some tax strategies to offset Bob's large W-2 income. Now, after doing that for a while, they realized they didn't really want to do that, so they pivoted and made that more of a long-term rental. But Sue decided to start her own business. When she did, she was able to actually open up her own employer account, and she was able to defer even more money in an employer solo 401k. So now they had 2 retirement accounts going. Now, as things continued to progress, they had more and more income, and so they were able to not only pay their kids college, but they also were utilizing some strategies to defer a potential business sale for Sue. So her company really took off. So what they did was they decided to make her company a C corporation, and they worked with an accountant, and they were implementing a qualified small business stock so that when she sold 10 years later, she didn't have any capital gains. Now, when she sold her business, she was able to open up a donor advised fund, take some of the money from the business sale and defer it right before retirement so that they could get a large tax deduction, and then also they could front load some of their retirement giving. They retired, they had a very comfortable lifestyle, and they were able to mitigate their tax brackets and give money to their kids. It's not as hard as it sounds. See you next time.